Welcome to TheoTrade. This is Don Kaufman. January 13th, 2021, minutes after the close here on this Wednesday afternoon. The S&P's mildly higher. The Nasdaq takes off to the upside, and the Russell starts to break down. This trading session, to me, can really only be described as complete correlation breakdown. Let me show you exactly what I mean by that statement. One of the first things that I want to look at this evening happens to be the advanced decline line. When I'm talking about like correlation coefficients, very often I talk about like the S&P 100. Correlation means like, there's 100 stocks, for instance, trading to the upside, or, 100 stocks trading to the downside here. It's a pure 50-50, but that is not necessarily what I mean by this evening's correlation breakdown. So the S&Ps are kind of a non-event today, right? They really are. I mean, come on, they're up nominally. 0.3% is nothing, right? The Nasdaq gets a little bit of a bid under it. Actually tags. I mean, the Nasdaq did tag 13,000. That's a big number. So the Nasdaq tags 13,000, hits just a marquee level. But what I'm talking about in terms of correlation breakdown is a bit deeper than that, right? One of the things that's probably the largest standout here. No, it's not the Nasdaq. One of the things, the larger standout, take a look at the bonds. So the bonds today, first and foremost, saw some serious size. In fact, when we start to look at the bonds, again, just monstrous trading volume inside of the bonds. Okay, the notes, they're having almost record size volume in the bonds, record size in the notes. And what is surprising today, specific to the bond market, is the bond market has this wicked reversal. And I want to zoom into this so you guys get a little bit of a better feel for it. But this wicked reversal, onto which we had like this big reactionary low yesterday, maybe the 167.11 ticks, and rips to the upside. I mean, we're 2 full bond points north of the low from yesterday. So why do I call that, complete correlation breakdown? That's actually in reference to the fact that the financials are completely unimpeded by this. So the financials have reacted very positively to this wicked move up in interest rates, and rightfully so. But all of a sudden, the interest rates, they reverse. You would have anticipated the financials to reverse. This is something you got to watch very, very carefully in the next day or two of trade, because again, I'm a little perplexed on this front. The financials finished unchanged in today's session. What right now is really propping the financials up, all right, in light of the fact that interest rates just declined. Actually, if we look under today's option statistics, there really wasn't like a huge amount of volume inside of the financials, because I know a lot of people are probably thinking like, hey, maybe they traded a bunch of options in here. Maybe those options actually, propped up the financials. No, not at all. In fact, to kind of detail that a little bit deeper, if you look at the call sizzle and the put sizzle, that's today's option volume versus the previous 5 days. There was no volume in the call side of it, a little bit of volume in the put side of it, but net, we did absolutely nothing in the financials. They finished unchanged. Again, rates, they got rocked the last 2 trading sessions, and the financials are unimpeded. So you guys know I've been watching the financials just incessantly lately, because the financials reversing, it would be a breaking point for the S&Ps. Now, it's not just the bonds versus the financials that stand out. Okay, it's the bonds also versus like the emerging markets. I actually took a bearish position in the EEM. Okay, the EEM has kind of flattened out since I put on that bearish position. But here we have again, big movement in the bonds. EEM is unimpacted. But the emerging markets, there's less of interest rate sensitivity there. When I look at the emerging markets, I always think of the dollar, right? Strength in the dollar. Okay, and here we go. The dollar, was selling off like crazy. All of a sudden, the dollar starts to rally, sees another rally today. And again, the emerging markets have been unimpeded by raising, the interest rates. The emerging markets have also been unimpeded by the fact that, again, we have a stronger dollar the last couple of days. It's a complete correlation breakdown. And so emerging markets are under the influence of what? Bullish theme to the marketplace. The interest rates exploded up. Okay, it helped the financials. Then the interest rates actually pulled back, didn't do any damage to the financials. And I could keep going and going on this. If you want to take a look, like the energy sector has just been on fire. Okay, but that also should have been impeded upon by a recent, explosion, if you will, up inside of interest rates. It's not. Today, though, is really kind of one of the first down days, and can't really call this and quantify this as much of a down day. We didn't even give up the gains from yesterday, but the energy sector, it too, very, very light volume after just an absolutely wicked day. The point that I'm trying to make here is you actually look down the screen, some of the usual suspects, okay? The marketplace kind of listlessly floating. And if you take a look at the S&Ps, there's like almost no volume inside of the S&P futures. This looks in very large part to be some heavy retail trade that's playing a little bit of the rotation game. Quite ironically, it's just one of the first times we have not had to mention Tesla in an evening video. But lo and behold, you take a look at this, and again, this correlation breakdown. And in previous instances, when you've seen this, all of a sudden a trade like this, nothing seems to make sense. Volatility is kind of backing off in the vol futures, right? The VIX backed off to like 22 handle, but at the exact same time, you look down at the VVIX, the volatility of the volatility index. Ironically, that actually finished the day higher. Again, it's a complete and utter, again, correlation breakdown out there. Now, the last thing that I want to leave you with this evening, because you're thinking to yourself right now, great, he has no idea what's going on. Okay, I'm going to tell you what I would look for the remainder of this week: volatility to come back in. All right, I think we can actually have some fairly substantial moves. One of the things that's a really key standout, this expected move specific to the SPX. We've done nothing this week. Again, they're just slopping around. A couple of individual products are higher or lower. The bonds have been just rocking all throughout the course of the week. We got to touch the upper end or lower edge of that expected move. And this is something I mentioned just week in and week out from a probability point of view. Okay. There's an incredibly high probability that at some point during each and every trading week that we tag the upper end or lower edge, okay, of the expected move. In almost every recent week of trade, we have done just that. Here's one week that we find we didn't actually tag the upper or lower edge of the expected move, but we got awful close there. So as you actually go back over time, you'll see there's an incredibly, incredibly high probability, okay, of that occurrence. The expected move, and to remind everybody, okay, started the week somewhere about 38.25. The upper edge of this expected move is about 3,900. Okay, lower edge is about 37. Okay, we'll call it 47. There is substantial movement that is still capable and being priced in. People can talk all they want. It's a gamma squeeze, it's this, it's that. Right now, none of the gamma risk is being threatened. Okay, and that again, it gives us the propensity to move up substantially and or down substantially. Okay, and I right now would actually place my bets with the bond market. And that is, if you're curious and I go, oh, we're going to move up or down, we're going to move big. It is largely going to be predicated upon what the bond market. If the bond markets continue, okay, the rally back, these S&Ps are going to roll over. That all of a sudden, this complete correlation breakdown, everything will just snap right back into place and will actually pull lower into the lower edge of that expected move. That's if, again, those bonds continue to rally back up. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.